Ladies and gentlemen, please take your seats as we are about to start a great session, Decrypting Tomorrow, Unstoppable Rise of Crypto in Fintech. To guide us through the crypto journey, please help me welcome on stage our moderator, Andrey Stoychev, Project Manager at Nexo Prime. Dear Andrey, dear speakers, the stage is yours.
Thank you. Thank you for the invitation. Thank you for everything what you are doing here. IFX team, amazing guys. First of all, I want to apologize for my voice, but during IFX week here in Cyprus, there are a lot of business meeters. So that's why my voice is a little bit down today, but hopefully it's fine. Welcome everybody. Andrey Stoychev here. I'm almost 20 years in FX world, doing a lot of interesting things. 3 years ago, I joined Nexo, a really cool and amazing crypto company, by the way. And I started really a big fan of crypto. And I really enjoy how crypto and traditional finance working together, adopting each other and start helping growing in general both sides. So I think this will be the main topic today with my guests. First of all, I would like to invite you for a short intro, all of you, and after that we'll take it from there.
Thank you. Thank you very much. Hi, everybody. Thank you, IFX Expo, for inviting us here. It's a great place. We met a lot of nice people, and I think it's a great opportunity to do some changes for this amazing financial world. Quick intro about myself. I'm Ali Kassab. I'm the chairman of Freedom Group. I started my career as a software engineer and became very quickly one of the pioneering software industry editors in France. So I'm French national. I grew up between Europe and Middle East. I have participated to the legacy, let's say, the traditional financial world by building payment platforms in the UAE in 2016 till 2020, where I have been awarded CEO of the Year in 2018 for digital transformation. And then I was awarded Entrepreneur of the Year in 2020 as well for some projects that we have initiated. Since then, it was like I did a couple of exits. It means that I created a couple of startups in the software and the payment industry that have been acquired by either family offices or private equities. And then I decided to create my own family office. It's kind of family office installed in Limassol, between Dubai and Cyprus. To join the East and West, to be able to operate in Middle East and operate in Europe. We invested in several startups in digital, gaming, crypto exchanges in Europe, and payment solutions. We are here in the IFX Expo to exhibit and showcase our payment solutions. We have our own booth. I know both challenges of both worlds, and we'll be able to discuss it during our slot today. Thank you very much.
Thank you. Thank you.
Yeah. Hello, everyone. I'm Andreas. I would like also to thank the organizers for inviting us for another year. And my role is the EU Community Operations Manager at BitGet, which is one of the top exchanges, crypto exchanges globally, the largest crypto exchange in COVID trading, one of the top 5 exchanges in derivatives trading. And my journey has also been quite long. I've been in crypto since 2014 or 15. Had a brief academic career, let's say. So that's why I obtained a PhD degree in the field of blockchain adoption. And most recently I worked at Binance, and now, as I said, I'm at BitGet. Looking forward to share our ideas with the rest of the speakers.
Good afternoon, everyone. My name is Yanos Ashodis. Also been involved in financial services for more than 20 years in a variety of roles. I would say that for the past 15 years, I was mostly involved in advisory services with emphasis on governance, risk, and compliance. So I was responsible for dozens, if not hundreds, of engagements in regards to licensing for anything from binary options back in the day, if anyone remembers those, all the way to crypto exchanges, all the way to crypto exchanges today. And what really excites me in the industry is the fact that there's always something new, and I'm really excited being here because this is something which I really, really enjoy doing, comparing and kind of contrasting the world of innovation that cryptos bring with the old school world of financial services and how this can be facilitated in the financial services industry. And I'm sure that with the panelists here, we're going to have a very interesting discussion on these topics.
Hi, I'm Rupert Poland. I work for Marsh. We're the largest insurance broker worldwide and risk management provider. I head up the UK digital assets team. We've been in the digital asset space since 2014 when we placed the first crypto insurance policy with Lloyd's of London. And since then, we've really grown and developed with the space, and we service some of the largest exchanges, custodians, and stable coin providers worldwide.
Thank you, guys. Thank you for this intro. After this interesting intros, by the way, maybe we can extend our conversation with I don't know, 1 hour or two, because I think we can discuss a lot of things here. But let's start with the main question. Currently, at what level cryptocurrency is integrated in the traditional finance, in the financial industry in general? What do you think?
Okay, this is a very tough question because I think it's still a war. I feel it like this. Okay,
it's not yet 100%.
It's not completely settled. I think there is still some resistance in the traditional financial world to adopt cryptocurrency because it's not controlled completely by all the governments, and maybe some regulators still don't understand how cryptocurrency can, let's say, disrupt or innovate the financial world that we have by providing more transparency, providing more efficiency, and more speed in managing those transactions. If we go back to the story of cryptocurrency, it has been, let's say, considered as a mean to invest into the blockchain infrastructure. Okay, if you take the blockchain infrastructure today, the blockchain technology that has been created to operate Bitcoin as a currency, which was created by Satoshi Nakamoto.
You sure?
Somehow. So the blockchain has different layers. Any technology need to operate. They need infrastructure, they need security, they need protocols, they need the layers, and they need applications. And those applications, they created, or those infrastructures created, one of them is Ethereum, you have Solana, they are all somehow technology, right? The cryptocurrency is only the outcome that we see out of those technology in order either to invest or to reward users on those technology. And of course, exchange, centralized exchange and decentralized ones came in order to provide users on the cryptocurrency and the blockchain interface, let's say, or UI UX, in order to allow them to access this world easily. We see today that it's very easy to buy crypto, buy cards, by depositing, transfer, or emitting money, or using other wallets, which means the adoption is growing, but it's still a little bit complicated for a traditional user to come and adopt it easily in his wallet, let's say. But I think the investment that has been made till now, and recently the adoption of ETFs by BlackRock and other financial institutions in the US or other part of the world, in Japan recently, are creating more trust in our industry.
Yeah, I think this was really important step.
It's an important step, but it's still not completely, let's say, a retail market yet. we in the Forex industry, we can consider that the crypto is very important to us because it offers ease of payment and adoption for the users. We'll come to talk about it during the discussion. And I think we are still at a, we did a big advancement, but there is still a lot of improvement to do. I will let...
yeah, thank you for this. I think you put some interesting points in your introduction, yeah. So we can you touch regulation, you touch adoption, you touch ETFs as well. So what do you think, Andreas, about all this stuff, and how FX and CFD brokerage companies are using cryptocurrencies these days?
You know, my specialty is on exchanges, so I just want to mention regarding the integration into the financial ecosystem, that I think we are in the right way, the right path. We are seeing payment processors like PayPal integrating cryptos. We are seeing custody solutions integrating crypto. We are seeing ETFs, as we mentioned as well, a major milestone now. We are seeing central banks considering cryptocurrencies, launching their own token. And if you remember, like 5 or 6 years ago, none of those central banks wanted to hear about crypto. So we are in a great phase now compared to what we were a few years ago. There are, I think, more than 100 central banks in the world right now who have at least looked upon the possibility of launching CBDC. This is, I think, a very important milestone. Obviously, there are several kinds of CBDCs, wholesale CBDCs, retail CBDCs for the users, but the pilot phases are there. I think there are already 3 countries in the world who have launched fully their CBDC. I think it's Jamaica, Nigeria, and Bahamas, if I'm not mistaken. So we are in the right path, certainly, and we are seeing all these financial institutions integrating crypto compared to what they were saying 5 or 6 years ago. The same people that are now running these institutions, I think they have realized that crypto is the future and it's inevitable.
Okay, thank you. Yanis, what do you think? You are, obviously you are working in Revolut, which is really a great company. And actually, I think it's a good example of integrating crypto in the services of the, let's say, traditional banking services. So tell me about a little bit more about how you integrated this, and in general, what are your, how can I say, feelings about this? Okay.
Now, I'm not exactly an employee of Revolut. I'm sitting on the board of Revolut Digital Technologies, which is basically the crypto arm of Revolut.
Which is even better in terms of this discussion here.
Probably, right. Look, I mean, the concept of crypto, I think that one of the main benefits of crypto is that it's democratizing financial services, right? And if you think about it, with every sort of innovation that has been coming over the past decade or so, or more than a decade, and this innovation, which is a little bit counterintuitive, but it's true, has been initiated by regulation. If you think about it, when was the first global explosion of financial services for the masses? It was with MiFID in the European Union back in 2007, right? So you have regulation, and you have regulation instead of stifling the adoption or the expansion of financial services, it kind of facilitates it. And I think this is what's going to happen with MiCA when it comes to the European Union by the end of the year. And I think that the crypto is going to be one of the facilitators that are going to democratize even more this expansion for financial inclusion. So what Revolut is doing, they had the platform already. And this platform, if you think about it, it started with traditional offerings of not even financial services. It started with banking. It started facilitation of payments. It started, again, democratization of payments, making payments easy for everyone, making the opening of an account as easy as having an application on your phone, which were things that were not really common. I mean, back in the day, when I say back in the day, I'm talking about 10 years ago, not 50 years ago. And I think it is this fintech innovation in combination with regulation that has managed to increase the adoption, increase the democratization, and companies like Revolut are in the forefront exactly because they managed to understand what the key drivers are for these innovations, what makes these offerings meaningful to the clients, and has managed to effectively utilize all of the facilitators to create a platform that's going to combine banking, financial services, now cryptos, and so on. Now, the trick, though, is if you look past the acceptance of the people, is what is the perception of them? Because I think this is something which is going to be even more critical than the facilitators that I just mentioned. The perception of most people right now, unfortunately, is that crypto is an instrument for instant gratification, right? You invest 50,000 euros in Bitcoin and you collect 60,000 after a day. But for people that are in the industry, this is not really what crypto was created, right? And I think that the challenge is not the adoption. The challenge is basically the understanding that when we talk about crypto, we talk about a lot more than that. We're talking about digitalization of assets. We're talking applications of real life solutions onto the blockchain. We're talking about integration of insurance, perhaps, insurance contracts into the blockchain, maybe tokenization of insurance contracts, maybe trading between insurance brokers of contracts on the blockchain. There's so many different applications. So we're on the right track, but I think that there's a lot of work that needs to get done to place crypto in the right context.
Yeah, make a lot of sense. Rupert, what do you think about this adoption these days?
I completely agree with all the other panelists. If we look at what cryptocurrency is used for today, it's really speculation, exchange. We've probably got one major use case, which is stable coins, which is really taking off. But if we look at democratizing financial services, we're not currently at that stage yet. It's not because the technology isn't there, that as a base, as a foundation, it will definitely get there. But so far, as we've mentioned, the regulation is very, very scary for large financial institutions and large companies to get into the space. So because of that, it's precluded innovation because we haven't had large capital being invested on the scale that we would have done if there were immediate revenue opportunities. We've obviously got MiCA coming in Europe, but even if we look over to the US now, with SAB 121, which was a staff accounting bulletin put forward by the SEC only a couple of months ago, and if that had gone through, it would have precluded every large US financial institution from custodying digital assets because there would have been such heavy requirements on them to set aside capital. That was rejected, and instead a crypto-friendly bill, FIT 21, was passed through, and now that's going to completely revolutionize the landscape from the US. So we're really at this inflection point now where we're going to get a lot more investment into digital assets. We've got a great base, and when those applications and those financial instruments begin to be developed, we're going to see the landscape change. And if we ask the question now as to who's bought an insurance policy using crypto or on a blockchain, everyone would probably say no. If we ask that question in 10 years, it would probably be a very different answer.
Okay, so as a conclusion, we can say that crypto is already in the financial world because of exchanges, because of all these retail platforms where people can touch, can exchange, can have, can use, can spend even cryptos. But I had a lot of discussions here with a lot of friends, from the brokerage companies. Most of the topics when we are discussing crypto is liquidity. Andreas, what do you think about, because obviously you are doing a lot of volumes, not only spot but derivatives as well. What do you think about this liquidity in crypto, and is this something which is really need to be improved? Because we are discussing this liquidity maybe several years in a row. That actually one of the reasons why financial companies and also, let's say, traditional retail investors and participants in the market are a little bit staying, how can I say, just in the middle between, okay, I'm going 100% there, or I'm just waiting to see a little bit more of improvements, specifically regarding the liquidity. Is this the main problem?
Yeah, I think it's a main issue, but we've seen in the past major crypto exchanges collapsing in cases of extreme market circumstances, and that was because they didn't have the sufficient liquidity to satisfy the demands of the users, for example, withdrawal demands and so on. So what we at BitGet did, but also other exchanges did, I believe BitGet did it first, it was the launch of the so-called concept of proof of reserves. So right now, every BitGet user can go in the platform and see that their assets are indeedly backed by public addresses. So this is a proof that there is sufficient liquidity in the platform for all the coins and the tokens and the trading pairs that we support. I think right now the reserve ratio is 170%. So in very few words, for every $100 million that there are in asset funds, $170 million we have it as a backup. So this was also launched by other exchanges. So I would encourage everyone who wants to use a crypto exchange to look into these specifics first. Make sure that the platform they will be using has sufficient liquidity and also other security mechanisms in place. And this, I think, should be also one of the main requirements of regulators when they look into the future of regulating further the ecosystem of service providers.
Ali, what do you think about this liquidity issue on the market, especially when there are, let's say, bigger orders approaching the market depth?
Look, I think there is a large liquidity providers today in the market. There are a few. I don't think the liquidity is an issue because there is a lot of investment and financial institutions who are providing this liquidity. We know Grayscale, MicroStrategy, etc. All those market makers who are providing liquidity. What mentioned our colleague here about proof of reserve in exchanges, and this is what I started talking about when we initiated the discussion, is the exchanges today are playing the role of interface between the crypto industry and traditional financial world, let's say. And they should be somehow placed in a way to be protected or to be monitored in order to avoid such collapse that we had with FTX or other crypto exchanges, which is very hard because at the end, we wanted crypto and blockchain to be a decentralized world, which means there is no human interference in the decision of, for example, sending money from, or let's say sending or executing a smart contract. You started talking about digitalization and smart contracts. The transparency in the blockchain world, if we just take a step further, is that the execution of the smart contract itself, it's something that is digitalized and automated in order to apply or execute some rules, either in the Forex or in the insurance or in the real estate industry, which is the beauty of the blockchain technology itself. Then cryptocurrency came to make a layer on top of all this. And today, the centralization of the exchanges themselves, which were not necessarily monitored, this is why compliance and regulation are very needful for our industry.
Let's say.
Yeah, they need, because at the end, what happened? It was a human and greed mistakes. What happened with FTX and other cases which led the market of cryptocurrency, let's say, and the blockchain to collapse 2 years ago. It's greed and the human interference which created those kind of situation. And this will never happen. But let's say the beauty of blockchain technology was to avoid that. Still, we have human interference in the execution of a transaction. If you take a bank today, you want to send a transfer or you want to execute a letter of credit or whatever, it's depending also on the bank decision to do it or not, fast or not fast. What Revolut has done is to offer transparency in the execution of fiat transactions, which is something that why the Revolut business model has been successful, because it was instant and successful and transparent all the time. And this is the same way with the blockchain and cryptocurrency industry, which you cannot say to someone, if you don't have the transaction ID, you can trace it. So you offer traceability and you offer transparency to the market. But again, this liquidity, we need to distinct it from liquidity and transparency in the crypto exchanges who are financial institutions who are holding customers' assets, and maybe manipulating them in a way in order to, I don't know, to invest in their liquidity themselves. This is why the proof of reserve, and even proof of reserve, if it's not on the blockchain, it doesn't make any sense. But I think the market now is enough mature to create some leadership in the execution of cryptocurrency and liquidity in general. And I don't think the crypto market, if you look at it, it's maybe 2.2 trillion or 2 trillion. If you compare it to the financial industry or forex industry, we're talking about something like maybe 70 trillion or.
It's not even.
So we are still at the early stage of this market. The liquidity is there, but we need to have more financial institutions who invest in it, and more control on the liquidity itself.
Yeah, thank you for this. While we were discussing here, I was thinking about something regarding adoption between the by the forex and CFD brokerage companies and the cryptocurrencies. Why with most of the brokers, they are facing really small percentage of volumes coming for crypto, exactly, and at the same time, a lot of clients are having accounts in the crypto exchanges, many crypto exchanges with a lot of clients, but they are opening accounts there, but not, for example, in the forex.
We process a lot of transactions that are coming for forex clients that comes from either fiat or crypto on one of our companies that we invested in. And just not to mobilize the discussion, I can tell you that cryptocurrency is the next lead on the payment, because once everything is at the end, when you are a financial institution, you want your client to be KYC'd and to provide the proof of fund for any transaction when he's depositing in his wallet or in his account to trade. And the forex industry, unfortunately, is still very much oriented fiat transaction, but there is a lot of forex now offering crypto as a speed of deposit, because it's instant and they can enjoy this facility. And I think it's only a question of integration or facility between forex world and crypto exchanges in order to find this and fill this gap.
So do you think that crypto exchanges and forex companies, we work together closely, let's say, especially after all these regulations, especially now in Europe, are coming from the crypto, maybe regulated traditional companies who have more, let's say, confident, they will be more relaxed, their compliance officers will be more relaxed to work together with the crypto exchanges, somehow to take, because I'm sure that crypto exchanges can also take advantage of knowledge and know-how which is coming from the traditional finance, and vice versa. Knowledge and know-how which is obviously for crypto in the crypto exchanges, we cannot compare with the knowledge with the FX guys. So that's why these two worlds, if they start working together, maybe this will be beneficial for both sides. What do you think, guys?
Start?
Yeah, of course. So I think it's inevitable that people who have been in the space for a long time, some for over 10 years now, are going to have a lot of knowledge. And if you're a traditional financial institution and you want to enter into crypto, I think acquisition of one of those companies is going to be quite a popular route and probably the fastest way for traditional financial institutions to get into the space. So I think that's probably going to be a bit of a theme. We've already seen it with Robinhood's recent acquisition as well, but I think it's going to...
So do you think that this is, let's say, one of the first steps in the future? Because now we were discussing what is the current situation, what is the adoption at the moment. According to your experience, and what do you think? I mean, as a first step, second step, or maybe what are the next steps for, I mean, these two worlds to start working even more close?
Well, look, it's definitely inevitable, right? I mean, there's a very, very clear overlap of the two things. I mean, a MiFID firm and a MiCA firm, it's effectively going to be the same thing, right? And we've seen that in practice with various regulators across the European Union. Right now, you have a MiFID firm, so you have a Cyprus investment firm, which is basically working across the regulatory framework that's going to be the same across the European Union, that can only offer financial services. Now, of course, the creation of MiCA and basically the framing of MiCA into the regulatory framework in the European Union is not a parthenogenesis, right? It wasn't something that was just handed down from a divine power. I mean, it was something that was based on the provision of traditional financial services. So basically, if you look at the requirements for a MiCA, for a crypto exchange company to operate, you're going to see that effectively the organizational requirements are identical, right? Now, unfortunately, you cannot turn a MiCA company into a MiFID company, but an existing MiFID company will be able to have a dual license and operate under MiCA as well. So I think that's definitely going to be the natural expansion and the natural, basically, additional service provision for most of the brokers in the European Union. Now, this creates, though, another interesting point. By definition, a MiCA company, I mean, if you look at size of its crypto-specific trading services, offer services that are akin to payment services, right? So basically, you're going to have the ability, if you have a MiFID company, to take clients' deposits into crypto, right? And then if the client doesn't have a problem with you having his or her account in crypto, it means that you're not going to be needing an EMI, right? So there's a lot of different and interesting scenarios that are about to be to be coming into place, and I'll be really interested to see what companies like Andreas's are planning to do, because I mean, what do you do when you're exchange? Are you antagonizing payment institutions? Do you want to become a payment institution? Do you want to expand into the full range of financial services, meaning that you want to have the ability to offer CFDs on crypto? Are you going to be issuing crypto under the underwriting provisions of the MiCA license? There's so many different scenarios that can be facilitated here, but I think that the overlapping is inevitable, and it's a natural progression.
Yeah. Andreas, I think, it's your turn.
Yeah, I think MiCA is a very important milestone, just for the audience to understand what it means for exchanges. So basically, before MiCA, each exchange, in order to be like fully compliant with all the EU countries, let's say, by law, they had to just obtain a VASP or a Kassab license in each European country. Now the MiCA license will allow to obtain this license in one European country and passport it to another one, passport it to all the other European countries. So this is a very important milestone for the European market. There are specific requirements, obviously transparency requirements, KYC requirements that come with MiCA. Our exchange, as with all the rest exchanges, are studying, our compliance department is studying the implications and the requirements, and for sure by 2025 we'll be taking more actions to comply in EU. But yeah, just a note that even though for me it's a very important milestone, MiCA is not like, for me, a perfect regulatory framework. It has some flaws, or let's say room for improvement. For example, in the laws around stable coins are a bit confusing right now.
A bit not so clear, let's say.
So, for example, USDT, which is the major stable coin by volume, is being delisted from many exchanges right now, or many services are being restricted right now. I think USDC only from the top stable coins in market cap is satisfying most of the MiCA requirements right now. So it's not the perfect regulatory framework. It leads to confusion for now. It also does not include DeFi, which I think that, even though I come from a centralized exchange background, I think that the whole community, the whole market will be moving to DeFi in 10, 15, 5 years, I don't know, but we will be moving to DeFi. So MiCA does not tackle that as well. So there is room for improvement, but it's certainly a great milestone and a framework that at least sets the first standard for the EU market.
Okay, so we put here, let's say, the future 2 steps. First, cooperation between the exchanges and the traditional brokerage companies. Second, obviously the regulatory framework, which is happening now. Any ideas for third step, which can be, let's say, which can improve the cooperation and the adoption of the crypto in the FX world?
Look, I think today what's the important thing is the protection of the consumer, right? It's an investor himself who needs to be protected when he is investing anywhere. If we take only crypto exchange as a industry or as a platform, today crypto exchanges are just offering volume, or let's say liquidity or market making to users to trade crypto alone. Okay, to join what Yanis was saying, are we going to become a payment institution to bridge this gap between forex or let's say financial industry and crypto? This is something else. Now we have to consider something very important in the crypto world, which is the KYC and travel rules and all the mechanisms that we have to put in place in order to offer the same protection that the financial institutions are offering their users. Like if I give you an example, when you top up your account on a forex exchange, first of all, a forex need to be regulated in a market in order to operate in this market. So there is a lot of forex that, let's say, counterpass this rule and they go to other platforms, etc. But let's say the user still has, he's investing, right? So he need to acknowledge that he might lose all his investments. When you pay with a card, Visa, MasterCard, what happened? You can still do a chargeback and call back on the wire, etc., till a certain period, right? So mentioning that the service is not delivered or whatever. So there is still a protection somehow if the service provided, or let's say the promise of the service provided or the offer was over-promising to the investor in order to protect him, which is not possible in the crypto world, because if you are buying crypto and you are sending crypto to a provider, basically you cannot call back this crypto. It's over. So you send it unless there are some other mechanism in place. But just to finish on this, I still think for crypto, for forex providers or brokers, it's very important to have crypto because it's also protecting them from any, let's say, users or investors who will play around with their investment, or they are not happy, or because when you invest, you have some disclaimers that you have to follow, and you have to accept that you are investing something that you might lose. And with the growth of prop trading today mechanism, there are some, let's say, over-promising offers that come on the place that need somehow to be also addressed either by regulators of the forex and traditional financial institution. And a lot of prop trading are using crypto in order to top up accounts for the traditional financial world, which is something that also needs to be discussed. If we take crypto exchange alone today, they are only somehow isolated. They are used only to buy liquidity as a crypto, top up your wallet and send this crypto to a Forex broker who is offering this. There are many brokers now, they're offering 3 possibilities of payment: card, transfer, and crypto. USDT or USDC or whatever. So there are some mechanisms in place that could protect also investors when they are sending crypto to Forex if the offer is over-promising or whatever. I think you wanted to mention something?
Rupert need to add something here.
No, just it's a really good point, which is finality. Obviously, in the traditional world, as Alex, you mentioned lots of times, there are lots of intermediaries involved. If you look at securities, you've got clearing, settlement, transfer agents. All of these provide, weirdly, an element of protection, but fundamentally it's quite inefficient. We've only just moved to T+1 in the US. Whenever you move things, it's prone to error. We've had a few cases where transfer agents have taken 60 days to execute a trade in its entirety, share prices drop to 20%, and then suddenly the end user's very frustrated. But if you take out all of those inefficiencies and intermediaries and you get immediate settlement, you then have the other problem, which is that who's going to help if it goes wrong? And it does mean that more responsibility will be laid on the shoulders of the people who press that final button. So making sure that we have the checks in place before we interact with the blockchain is really paramount. And I think that's probably going to be an important step for everyone to get on board with before it goes to the masses, as we will probably on this platform think it will.
By the way, regarding this, I think that some of the crypto providers, they're having their own internal rules to at least trying to protect the end users. For example, sending coins in a wrong address, let's say, or if they are scam or something. So they forced, for example, in Nexo as well, we have forced our clients to save addresses where they're sending coins, just to be sure that next time they will be not scam and they will use the same address, for example. Or if you are using, I don't know, USDT and Ethereum network, but not the Tron network or whatever.
Tether started blocking, even freezing the tokens that they were sent on from a wallet to another. They also can freeze the token.
Exactly. Yeah. So there is some, I think, self-regulations in this, but still, yeah, there are obviously room for improvement there. And because we are running out of time, and I want to put one final question regarding again the adoption of the crypto in the financial institution, and specifically for the FX and CFD brokerage companies, who are, I think, struggling from time to time to offer the right services to crypto traders and investors. What do you think is, what is the current trend of demand of clients regarding crypto? What they expect to see from the brokerage companies to be able to start using their services, not only trading Forex, trading indexes, but also trading cryptocurrencies?
That's a session by itself, right? Now, are you talking from the perspective of the brokerage or the perspective of the client?
I'm talking about perspective of the clients, like advice to brokerage companies.
Advice to brokerage companies.
How to attract retail clients.
Remove spread first, because they have a huge spread on their comparing to exchanges that are. Sorry,
it's a good advice.
No, absolutely.
It's a good advice.
It's crazy. If you talk eToro, sorry, we don't want to mention names, but you cannot. I mean, the buy price is higher than the current selling price. It's crazy. How you can make? I mean, it's completely. Blockchain, again, it's offering transparency, so the spread should be like almost
but look, I'm not going to be, to stay on the other side, but keep in mind that especially when you are over-regulated, there are so many, additional costs you are paying for this and that, and on top of this, obviously, you need the liquidity from somewhere to take this. So, I mean, it's a different type of, it's a pricing model,
But you have to look at, basically we're talking about two things though, right? I mean, if we're talking about CFDs, it's one thing. If you're talking about the pure exchange, it's a different thing. Revolut, for example, was making lots of money just by charging a fixed commission on the transactions. Yeah, it was just a fixed commission, right? it was a lot of spread, but on the other hand, they didn't have anything to gain because they were not market making, right? So basically, it was a simple commission-based approach. Now, most of the brokers, I mean, inherently, they stand to make money if the client loses money, right? And this is the standard of the industry. I mean, this is not a secret.
In general, yes, but specifically for crypto, it's a little bit different because forex companies are not so into this crypto world, so they prefer not to take
but the thing
a lot of risk.
Who is auditing, though? This is something I addressed before. Who is auditing the business model of the broker when it comes to exchanges? I mean, are they being a market maker? Is it a true market maker? Is it an MTF? Are they matching? Is anyone checking? Are they just giving CFDs to the clients? Yeah. Are they delivering in the third-party wallets
really
the actual token?
Order?
Exactly.
If you go on the blockchain, on the crypto exchange, you cannot basically cheat on the order. You know, the order is on the blockchain. Everybody see it. On the forex side, we don't know, on the CFD and brokers, many of gray areas stay there, and a lot of people are, I mean, this is how they make money. They basically, users lose their investment.
So basically what you are suggesting is just to be more transparent in general regarding the crypto trading.
Maybe decentralize forex brokers and find out.
Look, transparency, rules, basically you need to have the ability to check and to make sure that you have transparency in the market, right? And this is also going to enhance liquidity because this is something that you touched upon before.
I think this is really a good end of the discussion. Yeah. So transparency is the future of integration, and also more trust between the.
And you know today they are mainly focusing on if the broker has the right to sell in this market or not. This is, let's go dig down and dig deeply inside the operation of the broker or the agency, or let's say the forex financial institution, if they are operating their orders properly and their books properly. This is something you cannot have on a crypto exchange, which is something today completely clear and transparent for everyone. When the order is placed, you have it. The market maker, of course, is manipulating, and we didn't speak about volatility today, but I encourage everyone to trade crypto, of course, because when you trade crypto and you invest in it, you are growing the blockchain market and the blockchain infrastructure. It's something very important, and I still believe that you can still make more money, much more, return on investment when you invest in crypto today.
It's not an investment advice, right?
It's not an investment advice.
Cool. Okay, thank you guys for this session. It was really nice to speak with you.
Thank you very much.
I think we can extend, yeah, exactly, but maybe next time. Huh? Thank you once again. Thank you, everybody.